Good morning. Welcome to the XM.com weekly market update. And with me once again is Peter McGuire, the CEO of XM. Good morning, Pete.
Lovely to be here, Andrew. Good morning. Last day of October.
It is. I know, moving to that time of the year. So it's a big week this week, a lot of data coming out. So we'll start domestically as we normally do. The Aussie CPI number came out last week. The annual number was a good result.
It was a good result.
But the quarterly number was
a
not
shocker.
a good result, which is now pointing to potentially another rate rise next week.
Yeah, and it'll be the first one probably for our new governor. First off the blocks.
It looks like it, and I think she's
bullish.
Yeah, she is. Michelle Bullock is bullish. I think they have to be, So still at 4.1 is the interest rates,
Yep.
and your CPI is at 5.4.
And you've got pretty full employment.
Something's got to give.
Something's got to give.
So-
you keep on teaching me every week. Something's got to give, Pete.
Well, you normally want your CPI lower than your interest rates.
Correct.
And it's clearly
other
not
way
the
around.
case. It is in a lot of other economies, but not in Australia. So
Yeah.
we'll see what happens next week on that front. The BOJ, big week in Japan as well.
Yeah, we've got three central banks, Bank of England, Bank of Japan and the Fed. So, what's policy going to be? And this is where everyone's watching that yen approaching 150. It just seems to get buffered around there, a little bit over, a little bit under. It's still at 149. I'm just, sitting here. Mrs. Watanabe probably may not be trading big blowouts as far as moves, but there might be a move very shortly.
Yeah, it looks like there's a bit of pressure on them to potentially do something. And as you say, that yen's still hovering around that 149, 150 mark.
Yeah, I mean, when you're looking at the chart there, that really demonstrates as far as a holding pattern. It's in that channel really for the last month and a half, and it hasn't been a lot of movement. But if you're looking over a year, it's been a dramatic market to trade. It's been on fire, gave up from 150, then it collapsed to 128, back to 150. So, yeah, we keep on saying that was the market to trade for the 10 months of the year.
For sure. Plenty out in the Eurozone as well. GDP, which has been pretty much flatlining for the last couple of quarters, and the GDP numbers coming out, they may be slightly positive or slightly negative, but the economy there is not it's not in good shape.
No, it's not. Stagflation's a big concern, and just for everyone's sake there, it's hard to, it's an easy chart to understand, but they're flatlining in the middle there from zero all the way along. You just see those little blips. We're saying it's 0.1%. There's been no growth now. This will be for the fifth quarter. So has it been in a recession? It's only a smidgen. And where do we go as far as policy, with Lagarde? And is there going to be any chance of another rate increase? What's happening with PMIs? We've got all of those business surveys coming out as well. So, it could be a bleak time to be in Euroland over the Christmas.
Yeah, and if we look at the euro as well, that's under pressure, and the spreads between the US and the German bonds have stretched out considerably now as well, which once again favours money heading towards the US dollar.
And 106.50 for that US dollar index. I think it's got a 107 handle on it. Sometime, I won't be surprised in the first week or so of November. Where it is by Christmas, well, there's a lot of dirt to fly yet for 2 months to New Year's Eve today.
It certainly is.
2 months to the day.
Over to the US, once again, a big week over there with the interest rate announcement coming out, which will most likely keep rates on hold. But the durable goods number last week, once again, a big number, over 4%. They were anticipating 1.7%. So we've spoken about it many times, the resilience of the US consumer, and it's showing up once again.
Yep. Yeah, it is, and that lead up to Christmas, and see how healthy they are with Black Friday and all of those other shopping experiences that we're going to see over the next 2 months. And you can't deny it. We've got NFP, non-farm payrolls, first Friday of the month. So that's this Friday evening. 190 is the headline that they're saying. Now, if it shoots to the upside, then the Fed's got to say, hey, this market's too hot as far as employment. And if it shoots well to the downside, then that's going to be probably a good sign for them. But hey, you've just got to wait for that number to drop and the impact it has to policy decision in December.
Yeah, that's right. So the likelihood of a rate rise is
this week's zero.
Virtually nil sort of thing. So, but once again, we were speaking off air, the bond market at the moment is doing a pretty good job for the Fed.
Yes.
With those, the rates now hovering around that 5% mark.
Well, just for everyone and for our viewers, because we've got traders from all over the world, a little bit of an education, you're well versed in the bond cycle. what the Fed does, and then you've got the selling of treasuries, and in turn the attraction of them is only on one thing, and that is yield. And if they get bid up, as far as if I'm not selling anything at 4%, well 4.5 maybe, and if I'm not selling those, I've got to increase the yield to get the result. And we've got a lot of treasuries that are going to be sold, and that leads into your other point, which is US dollar strength.
And I think once again, we look back over 12 years and the return in fixed income investments was basically zero.
Yes.
So that's why we had such a hot equity market. But now you can get a reasonable return on fixed income, which is essentially, especially if it's the Treasury, the US Treasuries, then it's effectively risk-free.
Yes.
So, and people might be happy with a 5% return.
Well, they've got to be, I think, conscious, what's happening with equities, and that's globally, and what we've seen in the last couple of months, and is that going to continue into 24? And people are a little bit nervous, and they probably think, as you said, well, if I can get 5% or 5.5% on a bond, is it a time just to wear this market and just sit on the sidelines and observe, and you're still getting a good profit?
That's right, you're still getting
with
something.
No risk.
Yeah, you're getting something, whereas in years gone by, you were getting next to zero. So,
and a very poor stamp.
And speaking of good trades, gold up around that $2,000 mark now.
Yeah, incredible. You've seen a decoupling as far as traditionally the correlation. There was gold down, bonds up, but now you've got the decoupled. You've got bonds up, gold up, and this is going to be an interesting play into 24, and whether the volatility, where are we this time next year? We've got a big year in 24, and it's too hard to forecast out, but I won't be surprised to see all-time highs taken out in any fashion because of, again, that flight to safety, protracted wars, and geopolitical uncertainty.
Yeah. And that all-time high is not that far away. I know you've still got to go a couple of $100, but you can easily make that up in no time.
Oh yeah, and it's all-time high already in yen and in Aussie dollar and a number of other currencies only last week. So yeah, game on for gold.
For sure. All righty, well, we'll keep an eye on the markets this week, the central bank decisions.
Yeah, three.
Probably not a lot of activity, but time will tell.
Well, I'm looking forward to the surveys. I want to see that to gauge sentiment and what policy. I think whilst we say there's not a lot happening, and even there can be no rate rises, then you've got to look at the rhetoric. And you've got to go, okay, now what did he say and what did she say and how did they phrase it? Then it's pulled apart and you go, right, well, maybe next month there's going to be a blast off.
Yeah. Read between the lines.
Yep, next Tuesday it will be Melbourne Cup and decision from Aussie. Yep. So we've got a bit to discuss next Tuesday.
Sure have. Good stuff. We'll regroup then.
Look forward to it.
Great. Thanks, Pete.
Cheers, Andrew.
And that's the XM.com weekly market update.